Hey guys, welcome back to Money with Marcus. If you are new here, do consider liking and subscribing. I like to make a new video every week just talking about personal finance, investing, and really just trying to help you out with your money. The whole reason I started this channel is just to try to be a helping hand to those who are just starting out investing journey, trying to be the helping hand I wish I had when I was first starting out, right? So for today's video, we are going to be talking about Bitcoin. Now I do know that every time you turn on your TV or jump on Twitter, it seems like the whole world is talking about Bitcoin and Bitcoin going up $100,000 by the end of the year. And like anything that gets that much attention from the media and that much attention from social media, you are going to get a lot of young retail investors who are going to speculate and put a lot of their hard-earned money into Bitcoin without really doing much research, and in some cases not even knowing exactly what it is they're buying. So for today's video, I am going to go over what is Bitcoin, how does Bitcoin work, and what are some of the cons, what are some of the risks that come along with putting your hard-earned money into Bitcoin. So with that being said, let's get into today's video. So what is Bitcoin? To put it quite simply, Bitcoin is digital money. And in order to understand what Bitcoin is, you first have to have some understanding of what money is. And so what is money? So money is basically, in any society that likes to trade, money is always going to naturally arise as the most tradable thing, right? Or the most tradable object. Now, money has always served two main purposes or two main functions throughout time. And that is money acts as a store of value, and also money acts as a medium of exchange, right? So if you look throughout time, we've used plenty of things, plenty of objects that we've given value to as money. Right. So, for example, if you go back even hundreds of years to the Yap Island in Micronesia, they used to use rice stones as money. Right. They gave rice stones value, so value was deemed as money at that point in time. In I think 15th or 16th century Africa, they used to use glass beads. At one point in time, we've even used seashells. We've also used salts, precious metals. Anything that was deemed valuable at that time and tradable at that time has always acted as money. Right, so money is simply based on a belief system, which basically means anything that we give value to, right? For example, if we had the dollar, right? If you're in the middle of a transaction, both parties believe that that dollar has value, and that's why that transaction works, right? So money is a belief system ultimately, right? And throughout time, we've given different things and different objects value because we believed it to be value. But ultimately, money has to be able to serve, again, as a store of value and as a medium of exchange. And in order for money to be able to do that, to be successful as a currency, money does have five main characteristics, right? Throughout history, throughout time, we've seen that money really needs these things to be actually successful as a currency. And that's probably why you don't see people taking a cow into the supermarket to buy a loaf of bread anymore, right? Because at some point in time, those different things that we used as currencies failed, right? Because one way or another, they didn't meet one of these five characteristics. And so in order for a thing to be considered money or successful as money, it does need to have these things. So one, it does need to be divisible, right? You need to be able to, again, break it down, add it back up, depending on the transaction that you're doing, because again, you don't want to take a whole cow into the supermarket to buy a loaf of bread. Two, money has to be portable. Easy for you to transport, easy for you to take around, easy for you to make transactions with, if you needed to make a transaction across the world. And three, money has to be recognizable, so it's easy spotted, it's easy to recognize that that is the currency, and it has to be easily verified as well. And four, it has to be durable, meaning it can withstand the test of time, it's not going to erode away over time. You're not going to deem something quite valuable if it's going to, fade away in about 5 to 10 years, right? And five, money has to be scarce, and this is actually the most important thing. And this, you could actually make the argument that this is why a lot of those previous items that we used or deemed as money in the past failed, because of its supply. You can actually manipulate its supply quite easily, right? It goes back to the old rule of supply and demand, right? If supply is limited and demand is high, obviously the price or the value of that object is going to go up, right? So in order for money to keep its value or to gain value, obviously the supply has to be quite limited, right? Or has to be able to be limited. And that's why gold has always kind of served as an alternative currency for quite a while now, for hundreds and hundreds of years. Not only has it been able to store its value, but obviously the supply for gold is quite limited. So those are the five characteristics that make up money. So the question is, does Bitcoin meet any of these characteristics. So let's go over it again. Divisible. Can Bitcoin be divided down, broken down into denominations or added back up? The answer to that is yes, because one Bitcoin is actually 100 million Satoshis, right? Now, two, is it portable? Yes, Bitcoin is just data. So obviously data, you can transfer data across the world in an instant. It's quite easy to do so. So really easy to check that box. Is it recognizable? Again, Bitcoin is just information, and the whole system is based on being able to be verified quite easily, so it checks that box. 4, is it durable? Data is not going to erode, information is not going to erode over time, so yes, it ticks that box. And lastly, and most importantly, is it scarce? And this is what's drawn Bitcoin's comparisons to gold as digital gold, because the supply of Bitcoin is actually limited. We know for a fact that there's only ever going to be 21 million Bitcoin. And for the first time in history, we have a currency that is actually limited. It's absolutely scarce, right? There's never been a currency that has absolute scarcity. If you take gold, for example, if a good example that Robert Breedlove brings up is, for gold, if we were, say, for example, able to just snap our fingers and everyone in the world was just to stop doing what they're doing now and just try to mine gold, the supply for gold would obviously, skyrocket, and then supply would increase and therefore, devalue it a little bit, right? But for Bitcoin, no matter how many people are working or mining Bitcoin, there's only ever going to be 21 million Bitcoin. Now, I can't say that for sure because obviously I'm no expert in the technology behind Bitcoin. I don't know if they're ever going to be able to, change the coding to Bitcoin and maybe, increase the supply in the future. At the moment, that seems highly unlikely. So for now, let's just go for the fact that we know that Bitcoin is limited at 21 million Bitcoin, and there's never going to be any more or any less than that. That's kind of what's making Bitcoin shoot up in value at the moment, is that people kind of see Bitcoin as a hedge against the devaluation of the currency. They see the US Fed printing limitless money. It seems like they're printing trillions of dollars like it's nothing these days. And obviously there is that worry and scare that there's going to be, hyperinflation coming in the next couple of years. And because that Bitcoin is limited in supply, there's no one person in control of it. There's no one person who's deciding how much Bitcoin is going to be released into circulation. But people are seeing Bitcoin as a good store of value and as a good hedge against inflation. And that could be one of the reasons as to why we're seeing, Bitcoin's value kind of shoot up right now. And a lot of companies, Tesla, PayPal, a lot of companies are starting to really back Bitcoin, and it's really giving Bitcoin that financial backing that it sort of lacked in its previous bull run in 2017. Right? So guys, that's a really brief, a really generalized summary of what Bitcoin is. All it is it is simply digital money, right? And that's why I went over the characteristics of what money is, so that you see that basically just picture money, but Bitcoin has obviously digitized it and put it onto the digital world, okay? And so with that being said, now let's get into how does Bitcoin work. I'm going to do my best to try to explain this as simply as I can. This is going to be a very generalized explanation. And the best way I've seen this explained is by a video by a guy named Anthony Pompliano. I'm actually going to link his video down below in the description because the way he kind of explains the Bitcoin system is probably the simplest and the easiest of understand. And I'm going to do my best to sort of reiterate what he was saying. So Bitcoin uses the same system that Monopoly uses. Right, so basically, how that works is, so let's play Monopoly, right? So you have 4 players, right? You have a board, and all these players obviously are given money by the bank, and then whatever money that is not in circulation is held in the bank. And so with Monopoly, you don't need a banker to manage the bank, right? Because let's just say I roll the dice and I go past go. And then obviously every time you go past go, you have to collect your $200, right? And so I just reach into the bank, grab the $200, and then the game carries on, right? And the reason why that works is because everyone can see me reaching into the bank and taking out the $200, right? So there's that transparency between all 4 players. So there's no need to trust any one person, or there's no need to have any one person manage the bank, because you guys can all see me take out $200. Obviously, if I was to go in there and grab $300, you guys would all call me out for it, and I'd be a cheater and I'd probably get kicked out of the game. Very similar to Bitcoin's transparent public ledger, right? Because the ledger is of all the transactions are transparent and everyone can see the transactions, there's no need for one centralized bank to manage the transactions, right? So in that example, if we were to have one person manage the bank, right? Let's just say we had your mom managing the bank. So I pass go and she reaches into the bank, grabs me $200 and gives it to me. Or if I have to buy a property, she tells you, okay, Marcus, now you have to, give Annie her $200 and Annie, you need to give her her change, right? So in that example, using today's current monetary system, your mom would be the centralized bank. So essentially with the Bitcoin system, right, because there's that transparency between the players, there's no need for your mom to manage the bank and hover over everyone, making sure, nobody's tucking away a $20 note, right? So because it's fully transparent and everyone can see what's happening, there's no need for a centralized bank. So because we don't have to trust a centralized third party with our transactions or with the control of Bitcoin, that's where you hear that Bitcoin is a decentralized asset, meaning it doesn't have any one person or one thing in control of Bitcoin. Now, if there is no one in control of Bitcoin and if there's no one entity controlling Bitcoin, how does that all work? And this is actually where the blockchain technology comes in. So back to our Monopoly game example, because everyone can see each other going into the bank or everyone can see the transactions being exchanged in front of them, right? There's no need again for a third party managing that. But then again, what happens if, say, at the end of the game, you need to actually review one of the transactions? What if at the end of the game, Annie asked me, hey, did you actually give me that $200 that you're supposed to give me? Or did you pay me the correct amount that you were supposed to pay me? So who or what tracks all of that? So that's kind of where the blockchain technology comes in, right? So blockchain, the most simplified way to explain blockchain is just literally picture a block linked together by chains. So now if we go to our Monopoly game, right, to solve that issue, let's just say during the game, from the start of the game, while every transaction takes place, whether it's pass and go, whether it's buying a property or whether it's loaning money, every time a transaction happens, we write it down on a piece of paper, date it, time it, Marcus gave so-and-so this at this time, blah, 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 right? We write down every single transaction that happens from the start of the game, right? And let's just say after 10 minutes, we rip off that piece of paper, stack it, put it to the side, and then start on a new piece of paper, right? So by the end of the game, we then have a big stack of paper that has every single transaction on there. So that way, if Annie does question whether I gave her that $200, which I probably would have given her that $200, if she does question that whether I did pay her the $200, we can actually then go back through every single transaction and we can actually pinpoint time and dates whether that transaction did take place, right? So that's essentially what blockchain is. Blockchain is a block of data, right, that records every single transaction that happens in the Bitcoin network in 10-minute windows. Once that 10-minute window is up, it will then block up that data and it will link it using a chain to the previous block of 10-minute transactions, right? So that goes all the way back to the start of Bitcoin in 2009. Right? And the beauty of Bitcoin is that anyone and everyone that is on the Bitcoin network actually has access to every single transaction going right back to the start of Bitcoin. Now, to put this in perspective, imagine being able to go into the government's ledger, right, and just seeing just exactly what they're spending their trillions of dollars on or their millions of dollars that they're printing on. Just imagine having that kind of transparency, but not just with with government officials, but every person in public has access to that information. That's the kind of transparency that Bitcoin and blockchain is offering, and that's the kind of transparency that the Bitcoin network operates on. So guys, do keep in mind that that is a very overgeneralized explanation of Bitcoin. There is a lot more that goes behind it. There's a lot bigger, fancier words that I didn't say or care to or probably able to pronounce that goes behind Bitcoin. However, that is just me just really trying to simplify it down, but that is the core concepts of what and how Bitcoin works. So if you do have any questions, fire them down below, or if you are getting any value out of the video so far, if you find this entertaining or enjoying it, please do like the video and subscribe to the channel. It does help out quite a bit. And let me down below, what you think of the video so far, whether my Monopoly example or analogy made any sense to you or not. It'd be good. Let's chat down in the comments below. All right, guys. So like any other asset class, like your real estate, stocks, Bitcoin does come with its own risks. right? And I'm just briefly going to go over a few that I feel like you should be aware of. So guys, keep in mind that I'm no expert when it comes to Bitcoin. I just draw from what a lot of other smarter people think about Bitcoin, and then just try to reiterate that and try to, simplify that for everyone else. So in this instance, I was reading up on what Ray Dalio had to say, or what he thinks about Bitcoin, right? So if for those of you who don't know, Ray Dalio is probably the most successful hedge fund manager in the world at the moment, and he has been for quite a while now. He manages billions and billions of dollars, so obviously he knows what he's talking about. So the first one that I like to go over is not necessarily a risk, but it is something that I do feel like you should know about Bitcoin if you are going to start investing your money into Bitcoin, and that is Bitcoin is extremely volatile. Now, what does that mean? It means that Bitcoin is subject to massive price swings, right? It can go up 20% in a day, or it can drop 50% in a day. It's happened before, and it happens a lot, and it happens a lot more often than it does for say something like a stock or a bond or something like that, right? So you do need to know that if you're going to put your money into Bitcoin, you have to expect that there are going to be massive price drops and price gains. And you have to know this so that it doesn't shake your resolve when you put your money into Bitcoin, right? In fact, at the time of recording this video, I'm pretty sure Bitcoin has already dropped 20% today in one day. Now, for any stock, that is a huge drop and something has terribly gone wrong. But for Bitcoin, it's actually just the norms, right? So do know that when you are going into Bitcoin, do keep that in mind if you're going to put your money into Bitcoin, okay? Have an iron cast stomach, be able to weather the storm, because there's going to be a lot of them. Just know that if you are going to ride the wave of Bitcoin, just be aware that it's going to hit hard and it's going to hit often, okay? So that's the first one. The next one, and the first one that actually Ray Dalio points out that he's concerned about, is Bitcoin being disrupted by a superior technology or another cryptocurrency. So he does point out that, of course, even though Bitcoin itself is limited in supply. Again, there's only ever going to be 21 million Bitcoin. The supply for cryptocurrencies isn't limited. He does point out that Bitcoin can be disrupted by a superior crypto because that's the way things have evolved in the past, and that's the way things evolution has always seemed to work out, right? He does then use the BlackBerry and iPhone as an example, right? So his example is obviously when BlackBerry was around, everybody wanted a BlackBerry, and no one could foresee that BlackBerry would not even be an afterthought in today's market, right? And along came the iPhone, and now everyone's either got an iPhone or an Android, and BlackBerry is nowhere to be seen, right? Back then, that was unthinkable, right? No one could foresee that BlackBerry was going to be non-existent within a matter of years. Ray does use that example to point out that the same thing can potentially happen to Bitcoin. Obviously, Ray says he doesn't know if this is going to happen for sure, and I would agree because I wouldn't know if this was going to happen for sure, mostly because I wouldn't have the IQ to predict things like this. But again, with technology, as we've seen in the past, right, it's always about disruption. And Bitcoin is in that space, so there is always going to be that chance that Bitcoin might get disrupted by a superior cryptocurrency. The next potential risk that Ray points out is the potential for your cryptocurrency to be hacked. It is vulnerable to cyber attack, right? At the end of the day, it is connected, it is online, and anything that is online can be attacked, right? And we're in a day and age right now where cyber attack far outweighs the capabilities of cyber defense. Ray points out that if the Department of Defense can't protect its systems, then it is pretty naive to think and to be completely comfortable thinking that your cryptocurrencies are immune to getting hacked or attacked, right? Even though the Bitcoin system has actually done quite well in the last 10 years, you can't completely dismiss the risk of cyber attack, right? So many will argue that the blockchain system, the way it works and the way the coding for the Bitcoin system works, it is almost impossible to hack Bitcoin because the nodes are spread out geographically. There's thousands of computers where Bitcoin, the data is stored, and that's another part of the decentralization of Bitcoin. However, you could personally be at risk of having your Bitcoin hacked, right? Not necessarily the Bitcoin network, but how you choose to store your Bitcoin. It can be at risk. It has been hacked in the past, and it can happen again, right? Now, Ray does point out that yes, there is a warm wallet or a cold wallet storage option, right? Where a cold wallet, you can actually choose to store it in a hardware device that is not connected to the internet, which is probably the safest way to store your Bitcoin. But to his understanding, not everyone has access to that, and it is quite difficult to set that up. So it is a risk that he can't ignore. And I would agree, you know, it is a risks that I would be aware of as well, that I would keep in mind. Because most likely, most of us would be storing our Bitcoin on an online account, right? So do keep that in mind, guys. Even though the Bitcoin network itself, has done very well the last 10 years to, fend off any cyber attacks, your personal storage device might not be as secure. Okay, so do again keep that one in mind. Now, the last concern or risk that Ray points out when it comes to Bitcoin, and probably the most prominent one, is government regulation. Ray goes on to point out that the government will simply not allow Bitcoin or gold or any other currency to be the better choice than the currency that they have created, also known as the fiat money that we are all currently using at the moment. Now, even though Bitcoin is decentralized and technically the government can't seize your Bitcoin, you can't underestimate what the government can do when it comes to putting in regulation into the markets, right? The government has a lot of power and it has a lot of means to accomplish this, right? We saw this in, the 1930s when FDR took everyone off the gold standard and actually seized everyone's gold. The government has a lot of power and you can't underestimate what they can and can't do. And so Bitcoin's biggest risk to it being successful is Bitcoin being successful. If the government sees that Bitcoin is getting out of control, out of their control, you can bet that they will put some type of regulation in so that they do retain power. History states that the government will never give up power of money. They will always want to have some kind of control over money. We've already seen two different governments try to implement bans on Bitcoin, right? So the first one is India. Right now they're going through a whole process of trying to ban Bitcoin. And then you have Nigeria, they're currently trying to ban cryptocurrency. Not many people know this, but China, since 2017, they've imposed a ban on cryptocurrencies, on trading cryptocurrencies. Obviously that's not working out quite well. However, you can already see what these governments' view is on cryptocurrencies, right? They kind of see it as a threat if they can't control it. So don't count out that the governments will put regulation on trading cryptocurrencies. Already if you look, Janet Yellen of the Fed is already talking about how cryptocurrency is used only by criminals, how Bitcoin itself is insufficient. You're already seeing these kind of narratives. You can already see the stance that they're taking when it comes to cryptocurrency. So again, it is something to be mindful of. Don't underestimate what they can and can't do, because again, it is the government and it seems like they can do whatever they want. But all in all, it's hard to say what's going to happen in the future. If anything, these regulations might give cryptocurrency, might make people a bit more, comfortable when it comes to cryptocurrencies, as I'm sure there is still a lot of people who are skeptical when it comes to cryptocurrencies and Bitcoin and Ethereum and all of that. And these regulations might just make it seem a little bit more, a little bit more legit. Again, guys, the way I explain Bitcoin, it does seem like a kid's game, but that was just me just really trying to simplify it down and really break it down to how I managed to understand it, because I'm not the brightest light bulb out there, right? So that's just me trying to explain it how I managed to understand it, and hopefully it helped you understand a little bit about Bitcoin and understand a little bit about how it works, and potentially some of the risks that come with it. And guys, that's actually going to be the video for today. Thank you so much if you've made it this far into the video. I deeply do really appreciate your support. I do appreciate you sticking around. Please like the video if it did add any value to you. If you found this helpful at all, like and share the video. That would mean the world to me. And let me down below. Are you bullish on Bitcoin? Are you invested in Bitcoin? Are you going to invest in cryptos? Do you have any other questions that you'd like to know about Bitcoin? There is obviously a whole lot more about crypto that I didn't go over in this video, but really I just wanted to sort of explain it in the simplest terms, because that's how I kind of managed to understand it. If you're a simpleton like me, then this video might have helped you. But again, guys, thank you very much for the time today. Head to the channel. I do have plenty of videos about investing in stocks, investing in the stock market. I'll put them up on the screen now. Click on them, like in the channel, subscribe. Thank you again so much for your time today, and I really do look forward to seeing you guys in the next one.